Hey, it's Jack. Tuesday. Now, back in Florida, obviously, but when I was in Colorado, I was talking about a rally, a pretty strong rally related to interest rates being paused, and that kind of being the general consensus with the Fed saying, hey, maybe we're going to pause any more hikes, and how that alone would be a nice catalyst for the broad market. And that turned out to be exactly the case. Now, we're seeing something that is kind of strange right now. And what it is the Dow Jones, as tracked by ticker symbol ETF, has hit a new 52-week high. And that's significant because that means not only is it the highest it's ever been this year, but that also goes all the way back then to the end of November last year. Now that's pretty significant that through all the turmoil, all the interest rate talk, all the nonsense and all the noise, the Dow Jones, one of the most boring indexes, has actually made its way to a new 52-week high. And this is significant because that means it's probably going to go higher. And that might not be today, tomorrow, every day, because it's had quite a run. But if you look at it where it is now, it's got a little more room to run. So do a lot of stocks. Now, if you want to participate in this without getting killed, I'll give you two tips right now. One is, whenever you buy a stock in this kind of a rally, you always want to use a stop, maybe even a trailing stop. And you want to set that 7% lower than your purchase price. That means that the most you could lose on that investment is 7%. And if you really want to get tricky, you can put another sell order 10% or more above the stock's price and use one cancels other. It's called an OCO. That way, if the stock goes up, let's say you got your order to sell it at $12 higher than your purchase price, and you got an order to sell at 7% below your purchase price, then whichever one triggers first is going to cancel the other one. This is a great way to protect and limit your losses, and also lock in a profit if you're out playing golf or taking a nap or playing with the grandkids or doing whatever you want to do. The second tip is, if you're buying a real volatile stock, you may want to, when you buy that, also buy a put option, even just one put option contract that has the same strike price as your purchase price. That way, if the price of the stock that you bought goes down, the value of that put option is going to soar. And that's perfect for volatile times like we have right now. But if you look back, remember I was talking about this rally coming, and we got it right now, but it might not be like so super clear that everybody can just jump on everything. It's still kind of a stock picker's market, even though the broad market is higher. The real action is going to come in individual stocks, not in ETFs. So use that stock trading tips I gave you right there, and you'll be better off for it. Stay tuned.